Now in this segment, we're going to turn to Asia, and we're going to do a lot of work on China and Biden and the U.S. in general as we see the friction points between rare earths with chips, semiconductors, and supply chains, because that is going to become the bigger component of where does this relationship go from here. Those that have been following me for the whole time know that I think that we are going in one direction, that we are going to continue to move in opposite directions, I should say, in terms of just the friction points that will remain, because I don't see Biden reversing a large amount, or if any, Trump error or Trump presidency restrictions. I think if anything, they're going to be enhanced or changed and said in a bit more diplomatic way. And there's a lot to be said about that and a lot to unpack, which we're going to do throughout this segment. And then we're going to wrap up with India and some of the other Asian data points that are pretty good, and especially on the Indian side. So this is just one of those charts that, jumped out at me, and I thought it's a really good way to introduce kind of where things are going. Because I wrote an article talking about China, friend or foe, looking at just the underlying discord that is happening in the world, not just between U.S. and China, but on a global level. And this is something to connect back to why I think the market is a circus, and how pandemics and social unrest. There is typically social unrest that follows pandemics. Why? Because economies get impacted. People lose their jobs, their means of survival, the ability to get food, and they're going to go to war. They're going to fight someone to get what they have, or find a way to increase their standing in the situation. And this is just looking at points years after a pandemic event. So when we look at obviously the point zero and then a year out, we are now a year out from the pandemic, from when COVID started. And you can see just the amount of social unrest that starts to creep higher, especially given the problems we had in the global economy prior to 2020. So when we look at pandemics can set off a vicious cycle of economic despair, inequality, and social unrest. We already had growing inequality, lack of social mobility. So we're already coming in with a primed pump. Using econometric analysis, and by they say we, but we is the IMF. Using econometrics, we show that past major pandemics led to significant increase in social unrest in the medium term by reducing growth and increasing inequality. Higher social unrest, in turn, is associated with lower growth, which worsens inequality, forming that cycle, that vicious cycle. We take a closer look into this issue in a new IMF staff working paper by analyzing the effect of past major pandemics in 133 countries from 2008 to 2018, SARS, H1N1, MERS, Ebola, Zika, as shown in our chart here, which is what we're talking about. The International Country Risk Guide Civil Disorder Score, which is a high-frequency and cross-country measure of social unrest, increased significantly on average 1 year after the pandemic. Now think about all of those pandemics and think about how localized many of them were on a, not only just at times a country level, but also regional. This was a global pandemic that has increased now, and it happened at the same time that we had massive floods, droughts, food, locusts, army worm, this destruction of crops, as avian flu, swine flu. The overall problem is much worse, because not only is it global, it's also a food problem, and the food is going to drive a much bigger issue. Now, in Around the Horn, which is a new segment that we're doing with David, Ryan, and Elisa, we also talk about what are some of the things that are happening in the world. And one thing that's happening right now is in Iran. When we look at Balochistan, we saw there's a current regime problem. The locals there. Now, they've always wanted to be separatists. There's always been strife between the Iranian Revolutionary Guard and the government. This is nothing new. It's just now there is a new uprising where the local military has taken control of the police, some police forces, some IRGC locations, and we're just seeing more and more strife within Iran, which is something that for anyone who's been following our writings, what we've been talking about, we believe that we are much closer to a regime change in Iran than further away. And this is just another emboldening act that we continue to see because they have gone directly after some of these, some very well-protected assets. Now, this is also happening in a region that is fairly unstable in regard to the rest of Iran. So it has to start somewhere. There has to be a spark. And this could very well be a spark that starts to drive a much bigger problem within Iran based on a weak balance sheet, pressure from the fact that the U.S. left the nuclear deal when we've been putting pressure on them and their balance sheets continue to get stressed. This is just highlighting what we've talked about with the social unrest problems. And it's just not something that is going to go away. If anything, it's going to get worse. And why will it get worse? Well, let's look at inflation. When we look at inflation, this is going to look at how much impact are people feeling on their daily lives. So we can see the inflation target as that gray box. But then when we look at where did 2019 end and now the latest, you can see that there's a continuation of inflation in some key areas. Now, India has come back within its range, but it's gonna trend higher just given what Modi is looking to do by increasing the deficit, trying to increase some fiscal stimulus. But a lot of these places need to consider what does their inflation look like, and then that's going to mitigate or accelerate their ability to do stimulus, whether it be monetary on a central bank side by cutting rates, or more fiscal stimulus because the inflation is under control. That means that the local the bond market can handle some bonds because there's some confidence in the country. Maybe they're recovering faster, and this is a good way, and they can take advantage of that. But the inflation is a way to fan the flames. If we think back to pre-World War II Germany, inflation was a huge component of what happened. And obviously it wasn't the only one, but it's a domino effect. And when you look at the cascading events, it starts somewhere. And when you have massive inflation and then some person who comes up with some solution, whether that you're going to play on people's emotions because people are fragile. They're looking for answers, and whether that answer is crazy, aka Hitler and the Nazi regime, or something that sounds sane in terms of Keynesian economics that came out in the UK during periods of strife. There are ways to address this, and unfortunately, inflation is one of those ways to fan those flames, and that's what we always look at when we're talking about social unrest. So then why does it matter so much? Well, let's look at world growth and soybean demand. And this is going back since 2000. So when we look back, and again, speaking to the shift higher, we can go back to 2017 to 2018. This is not something that it's always gone up. There's always been a year-over-year growth going all the way back to 2010. So we continue to see the demand going up. The population's getting bigger. People want better food. There's more livestock, so there's more feed. This is why when you have a hiccup in planted acres, in floods, droughts, and whatnot, you're going to start to see this increase in stress. But what is China doing about it? So when you look at China, China has made a big push to reinvigorate the party, to remind people they're communist and they have a Marxist bent, and to really look at that in a more aggressive way. So what is the party launch? And think back to the chart that we're showing now with the soybean growth. Party launches the History Education Campaign. So the campaign is part of the buildup of the party's 100th anniversary, which is happening this summer. And what let's take some quotes from President Xi. We must educate and guide the whole party in understanding how, through the extraordinary experience of the party, Marxism has profoundly changed China and profoundly changed the world. Xi also using the campaign to promote his political agenda, and this is another quote, in particular, it is necessary to deeply study and understand the party's theoretical innovations in the new era in the light of the historical achievements and changes in the cause of the party and the state since the 18th Party Congress. Now, how are they going to look at the Great Leap Forward, or how that was a failure in terms of food, in terms of growing the amount of just cropland needed to support such a population? There's a lot of things to think about. Well, you're talking about this, but how are you going to address some of these good times, these bad times, or are you just going to ignore it? And these are things that we have to look at when we're trying to figure out which direction is Xi pushing in terms of the U.S. versus China, and how is he trying to mold the Chinese opinion of not only the party, but communism versus the buildup of capitalistic approach in Hong Kong and Taiwan. So the campaign also aims to enable better governance outcomes. If we win the trust and support of the people, the party will be able to overcome any difficulties and be invincible. And we're seeing a huge push in Hong Kong, where now they're saying that if you're against the party, you are not allowed to run for public office, which I don't think is surprising to hear that being said anywhere. Now, when we consider what some of the impacts are, now that we look at what is being urged in terms of the system-wide adherence to 5 principles. So let's break this down, thinking about the fact that China is now the largest buyer of all grains. They continue to buy in the market. What are some of the 5 principles that they're looking to adhere by on a system-wide level? Acting in strict accordance with the Constitution and the Basic Law, respecting the central leadership in Beijing, again, party directive, making sure the electoral system is in line with the actual situation in Hong Kong, again, trying to force and limit who can actually come in and run, implementing the administration leadership system with the chief executive at the core, adhering to the Patriots Govern Hong Kong principle. So let's clarify that. We must ensure that the members of Hong Kong's executive, legislative, and judicial organs and the people in charge of important statutory bodies are all real patriots. Under no circumstances shall important posts be held by anti-China elements. Well, that just takes away pretty much anybody that doesn't think like you in the Hong Kong situation, thinking back to how are we, and this again is a pushback against what the US said and Europe has said and others have said against China's handling of not just Tibet and Xinjiang, but also in Hong Kong. This is them saying, get out and mind your own business. Making sure that Hong Kong is governed by a correctly minded crowd has been a top priority for the central leadership since the city's anti-government protests in 2019. When China's legislative and political consultative body meets next month for its annual 2 sessions, Hong Kong's electoral reform will likely be on that agenda as we get prepared for what is to come. Now, before we go into the supply chain side, we have to understand that the NPC, or the China's legislature, will approve the 14th 5-year plan, which will set the country's development targets for through 2025. What are they focusing on? Total factory productivity, input-output ratio, land utilization, energy utilization, government debt ratio, Gini coefficient, and Engels coefficient. So think back to, again, rural and farming, and the problems that they have right now on arable land, growing population, and actually now when we go through it in more detail, a fading growth rate, and what the current underlying component really looks like in general. So let's look at the exposures of industries using electronics. And this is where we start coming into what Biden has said. So Biden has said he wants a review of U.S. supply chains to rectify, and this is just an update that came from Bloomberg, Biden plans supply chain review as chip shortage hits home. U.S. seeks to end reliance on adversaries such as China. Review will take months and offer no immediate solutions. So They've come out and said 100 days, we're going to look, the Biden administration, we're going to look. We're not going to change anything that Trump has done with China. We are going to review what is our situation, what is our exposure to China on rare earths, on supply chain, because they've started to talk about potentially limiting rare earths. Now, that has been mitigated given the fact that they issued a new quota. We'll talk about that in a minute. But this speaks to what is the supply chain and what is our risk to China. So let's look at industries using electronic components. China is right at that top level. So we have South Korea, Germany, Japan, China. So when we think about South Korea, obviously there's electronics outside of autos, but what's the motor vehicle side is a huge component of not only just South Korea and Germany, but also Japan and Mexico. Mexico is obviously a big component into the US. Why do we care so much about Mexico? And this is one of those key reasons, because this is where a lot of our manufacturing takes place, especially on the motor vehicle side. And we've asked Taiwan, South Korea to increase their development and to really help drive some of these shortages, because our supply chains are being impacted based on their lack of capacity on the semiconductor side, and just a huge increase in cost from rare earths to everything from, from rare earths to copper to tin to quartz to silica. We're seeing just these input costs. And if you consider just how cheap we've gotten used to a lot of this technology, as it gets more complicated, it's going to be harder and harder to keep these costs so low, especially with the raw materials going up in price. So now let's take this and let's look at the semiconductor manufacturing capacity by country. South Korea and Taiwan are obviously at the top of the list. We were looking to increase our exposure to them, and we've signed deals with Taiwan Semiconductor, and we've been very adamant to asking Taiwan very openly to help us. Now, what do we know about Taiwan and China? Well, it's one nation, two parties, or one nation, two systems. This is us saying, without saying it, don't touch Taiwan. Because why? China needs new semiconductors. They need an increase in manufacturing capacity. They need an increase, or they want to increase their technological savviness and ability to be self-reliant. Well, Taiwan has an installed base. Why not just go into Taiwan and take it, especially given the fact that Xi and China and the CCP believe Taiwan is a part of China anyway? Well, this is our way of saying step away, because this is where, when we look at our supply chain, there is a lot of exposure the U.S. has in Taiwan from a perspective of just supply chain integrity, but also a lot of intellectual property that we would not want to get into the wrong hands. And that leads us into the Foreign Minister Wang Yi delivered an address on U.S.-China relations. So take that and let's think about what are the current relations. Wang also had several specific asks of U.S. policymakers, including stop undermining China's sovereignty over Hong Kong, Xinjiang, Tibet, and Taiwan. Remove unreasonable tariffs on Chinese goods and restrictions on Chinese technological companies. We've already openly said no and no. Lift restrictions on Chinese cultural groups and media outlets operating in the U.S. and on Chinese students studying at American universities. The BBC, or Britain, and China have both taken away the broadcasting licenses of their respective entities in each other's countries, and that is very unlikely to happen at this point in time, given what President Biden and his administration has said. The U.S. and then this is coming from our side now, the U.S. has expressed concern about a new law that authorizes the Chinese Coast Guard to fire on foreign ships operating in disputed waters claimed by Beijing in the South China Sea and East China Sea. Again, 9-dash line, and these issues that we continue to harp on, because it's food, it's mostly food, oil and gas, and it's obviously trade routes. And we need to get South Korea, Southeast Asian goods into the U.S. markets, because this is where a huge hub of our supply chain is located. The U.S. has expressed concern about as well as discussing securing stockpiles and spare manufacturing capacity, partners could be asked to do less business with China. The U.S. will do an intensive review of its supply chain to sort out how much it depends on which countries for semiconductors and rare earths. So let's take this to rare earths. Well, what is rare earths right now? So China's 2010 attempt, as we've talked about, to use rare earths as a political weapon inspired other countries to ramp production because we can't be in that situation. So here you can see from 2012 onward, we've only had an increase in the amount of rare earths that are being mined in other countries. The problem is demand is also grown tenfold. So even though we've increased the overall production of rare earths, we also have way more demand. So even though we're diversifying and getting away from some of these structures, there's still a lot of overhang because the demand has gone up. So, but at the same time, something to ease some concerns in the near term, China has also increased their throughput. So the quota was higher than expected at 84,000 tons. The quota is 20% higher than expected. The first half quota is normally calculated to be half of the output of the previous year. That would have brought the first half quota to 70,000 tons. So China is saying that they're going to produce 14,000 tons more than expected. The reason for the larger quota, domestic industry players need more stuff. And this is going to limit the amount that they're willing to export. So still, the industry folks don't think that the new quota is anywhere near enough. And this is, again, coming to just the amount of growth that we've seen. With the increase of the quota, there's still a supply shortage of about 60,000 and 70,000 tons. So there's still going to be enough money to invest abroad because we need more rare earths, which is why China has done the Belt and Road Initiative, go into Africa and try to secure more of this product because we do have more coming online in not only parts of Asia, specifically Australia, Japan, but also in Canada. Now, taking that to the next perspective, and let's think of this more broadly in terms of what is coming to pass. So weeks before, the White House said it would keep tariffs in place on more than $350 billion in Chinese goods. And Catherine Tai, who is going before the panel either today or tomorrow for approval, Catherine previewed the bad news to groups of U.S. president leaders. Tai, who is President Joe Biden's pick for U.S. Trade Representative, told executives at a private meeting hosted by the Business Roundtable last month that lobbying for the duties to be removed wouldn't work, according to people familiar with her remarks. Instead, companies keen to keep the so-called Phase 1 trade deal struck by the Trump administration in Beijing should be prepared to live with the tariffs too. So we're essentially saying no change. Everything's the way it is. We need to do a deeper dive because there are a lot of problems that continue to crop up. President Joe Biden will sign an order on Wednesday that will direct a 100-day review across U.S. government agencies of the supply chain for medicine, rare earth semiconductors, and large capacity batteries, such as those used in electric cars. 80% of them have some connection to or related to China. Biden will also order a one-year review of a broader set of supply chains. Earlier, Biden to order supply chain review as chip shortage idles more plants. Catherine Tai is a tough on China person. She has won several major lawsuits against China. She is a shark. And I've said from day one that President Biden was not going to be lenient on China. And I think her appointment is going to be met with bipartisan approval. And because she has a very strategic mind as to how she's going to attack the Chinese conundrum. And I don't think that it's going to, I think it's going to be in what most expect or were hoping for when Biden beat out Trump for president. I think there's not going to be all that much change. And this is why it's so important, because when we look at the semiconductor production, we have to look at what does that look like. So fabless, design, R&D, the foundry is the biggest component. So when we think about a foundry, Taiwan Semiconductor, it cost them billions of dollars, almost $5 billion in 3 years to build a new facility. They're building another one in the U.S. for $7 billion over the course of 2 years. And the idea is that it's going to take, within 5 years, it's going to take $20 billion in 5 years to build one of these because it takes so much computing capacity, perfection to make these, because we're forcing so much stuff onto smaller and smaller chips. And this is why it's so important. There's a lot of IP where we wanted to help insulate ourselves from these issues, because a lot of this stuff also goes into military equipment and secured servers and other types of key assets that we need to protect. And we're going to ask our allies to do more with us. So thinking of that in general, let's think a bit broader. So the order states, this is continuing thinking about the foundry. The order states that working with allies can lead to strong, resilient supply chains, suggesting that international relationships will be central to this plan. Washington is expected to pursue partnerships with Taiwan, Japan, and South Korea in chip production in Asia-Pacific economies, including Australia, in rare earths. Again, we're looking to support. This is obviously going to put us at odds with China in terms of Taiwan and the South China Sea, because we need to make sure these trade routes stayed open, because it's not just these countries. It's also going to be other countries as well in the Southeast Asian 10. The U.S. plans to share information with allies on supply networks for important products and will look to leverage complementary production, find ways to work together. It will consider a framework for speedy sharing of these items in emergencies, as well as discuss securing stockpiles and spare manufacturing capacity. Partners will be asked to do less with China. Now, think about the RCEP trade deal and just consider that we're talking about countries that signed a trade deal, and now we're going to ask them to potentially do less with China. The U.S. has seen its share of global semiconductor manufacturing capacity plummet in recent decades. According to Boston Consulting Group, what was 37% in 1990 is now 12%. That's because we haven't invested. We've offshored into Japan, South Korea, and Taiwan, and the demand is higher. I mean, what doesn't have a semiconductor in it now? What doesn't have a semiconductor is a shorter list. What doesn't have a semiconductor is a shorter list than what does. Let's put it that way. Well, another thing, while it has asked Taiwan, which tops the list at 22%, as we showed earlier, to ramp up output plants, they're already operating at full blast, and there are a few options for boosting that supply. And this is why it's so important, because when we look at the chip industry choke points, you can see where those choke points are. We have the chip design software in terms of what's in the US. We have the IDM, or that assembly side, but we don't have the foundry. The foundry is the biggest issue within the US, which if you look at TSMC, which is Taiwan Semiconductor, and Samsung Electronics, that is where the foundry side lists. Now, some of the capacity we have in the US can do foundry, because the IDM is the full capacity all the way straight through. But there's a certain amount of limitation that we have, and this is why we need to make sure that we have that capacity, because as you can see, the blend between IDM and foundry is key for Samsung Electronics. We don't have that kind of capacity, and we need it, which is why we've asked Taiwan Semiconductor to come to the US and build out this capacity. The importance of semiconductors going forward is going to be huge, because we're again coming to inflation. We've only seen deflation from technology and semiconductors. Well, this is now a point where we're going to start to see the opposite as prices start to go up. So now let's take this from another perspective, because now this is taking it from China's perspective. Addressing vulnerabilities in the supply chain is a key goal of the dual circulation strategy, the new economic framework introduced by Xi Jinping last year. As we've been saying, the dual circulation was going to keep coming up because he wants to address supply chain, and tech is a huge part of that. According to a spokesperson, Peng Huang, improving supply chains involves a two-pronged approach where SOEs, state-owned enterprises, will address current deficiencies in the industry supply chain, and then they'll devote more resources to developing new technology so that China is not dependent on foreign suppliers. Well, what do we know about SOEs? SOEs are famously less productive and efficient than their private sector counterparties, even in China. SOEs taking on a bigger role in the economy is going to be a big negative for China's macro outlook. They've been, all of last year, they wanted to do, not just last year in the last 3 years, they wanted to do more for the private investor. They wanted to do more for entrepreneurs. Now, after Alibaba, after Ma, that is completely reversed, and now Xi is saying that state-owned enterprises and party members do better than the entrepreneur and the private-owned enterprise. On Tuesday, State-Owned Assets Supervision and Administration Commission Chairman Hao Peng laid out his plans for China's centrally administered SOEs at the press conference. Hao wants SOEs to play a bigger role in the economy because he said, Gross profits and after-profit taxes, gross profits and after-tax profits should both grow faster than the wider economy if the SOEs are involved. Now, we know what that means, and that isn't the case. But with all of this happening, well, we know that Australia is a big component because Australia has a lot of coal that was sitting out there, and India has turned to them and said, I'll take your displaced tons. So this is where we've seen a huge shift as there has been no agreement between China and Australia, both of them holding firm. And now India coming in and saying, I'm going to buy your goods. I'm going to become a bigger part of this asset. And here's where we see that the huge drop in terms of Australia to China is coming to zero, and that big increase into India and JKT. Now let's take this from the RCEP perspective, because Australia is also in this with China. Excuse me. Share of world GDP at purchasing parity, the ASEAN 10 is a big component of that, and China is an elephant in the room. But what the deal structure allows is for the US and India to use this as a framework to create a better adhesion to the supply chain. And let's think about how this can be done, which is the part of why President Biden is looking at this 100-day review. How can we come up with a means of sharing supply chain risk, sharing growth to incentivize the use and the expansion? Because a lot of these countries also fear China, and they are at odds with China in the South China Sea. And let's look at what are some of the components that are in both. Because India is also a big part of this, because India is going to be part of the solution, not the problem, when we're considering the U.S. supply chain. So when we look at the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, President Biden was VP during this negotiation. You can see the countries that are involved. Now, the Regional Comprehensive Economic Partnership, the RCEP, where do India and the U.S. overlap? And you can see where they overlap: Japan, Malaysia, Singapore, Vietnam. All very key assets. But where are we missing? We're missing South Korea, Thailand, China. Now, some of these are important. Some of them aren't as much given the structure, but South Korea, Thailand are very important in what we're talking about. Indonesia, the same thing. Myanmar is becoming a bigger component because what do they have? They have a lot of tin. They have a lot of raw materials as well in the region. So there's going to be a way, because the idea is to shrink this where India and China, India and the US are on the same page, because we are all going to need a large review of the supply chain to make things redundant and make sure that we have enough raw materials. And share of net new chip manufacturing capacity by region. This is what we need to grow. And this is the biggest component, because when you look at what China is building, what Taiwan is building, Korea, we need to be a bigger part of the new chip manufacturing going forward. And if we're not, we're going to have other people have agreements with us to do more. And that's where we look at U.S. share of chip manufacturing segments. We have the chip design, we have the IP. These are all key components. We have the manufacturing equipment, but we don't actually manufacture it. Again, coming to a way to grow those two common pieces. Now, when we think about the Central Committee for Comprehensively Deepening Reform, which is a mouthful, which is Xi Jinping chaired, the CCCDR, what are some of the key components thinking about what we just discussed on the recent growth? Improving price control mechanisms for commodities that are important to people's lives. What is more important than technology, rare earths, raw materials? Promoting high quality development of public hospitals, strengthening pharmaceutical sector supervision, establishing a promotion system for management roles at institutions below the county level, exploring market-based sustainable ways to value ecological products, preventing the emergence of overreaching local officials, again, trying to keep the party in order, strengthening governance of pretrial conflict mediation systems. Key areas for reform highlighted at the meeting include pursuing high-level independence in scientific innovation, again, tech, expanding domestic demand, dual circulation system, pushing for high-level financing opening. We're going to talk about that in a second. Promoting the shift to green development. And when we think about it, reform systems must be better integrated into overall policy making. There must be a sense of innovation. But now let's think about the National Administration of Rural Revitalization coming to the food cycle. There hasn't yet been any official word on the scope of the body's remit, but here's what we know. And this is coming from Trivium. NARR is basically a repackaged version of the State Council's leading group on poverty alleviation and development. Is a vice ministerial. The agriculture minister will oversee it on behalf of the State Council, given NAR's focus on rural issues. The party's former chief HR cadre in Sujan and a veteran agricultural official could head NAR. Then Zhang Taolin, MARA vice minister, turned his attention to the seed sector. Again, coming to growing and what are we going to do about this? Preserving agricultural genetic resources, supporting independent innovation and addressing choke points, supporting domestic seed companies to become more competitive, better protecting seed IP, and strengthening market supervision. They've canceled more GMO shipments over the last 10 years than any other country. And now they're essentially saying that GMO is okay because they need to address the food problem, which is a much bigger issue in general, which is why we focus on farming so much. Then let's take the child birth rates. Now, the new data adds fuel to population experts concerned about an impending demographic crisis. Birth rates have declined in China since 2016, with the country in 2019 recording its lowest birth rate, 10.5 newborns per 1,000 people since the founding of the People's Republic. This puts stress on how do people finance the elderly, provide tax revenue into the government. This is going to become a bigger problem. And by addressing some of these key issues that we've highlighted all the way through, the hope is to spur this into action and to get this birth rate back up, which you might think is counterintuitive given the fact that they already have the largest population. They already don't have enough food. So why are you trying to incentivize more people? And it's this conundrum of how do they balance the two, because they are going to hit a big spread. And this is where when we start to look at 2055, you can see the child dependency ratio in China, but the old age dependency. This is a communist regime. Everyone turns to the party as support. And here's where you can see there's going to be more and more people needing support as an older age versus what is being paid in on a tax revenue side, which is why there's such a concern on addressing the birth rate now versus other periods of time. Then when we look at where are they going to get this additional crops, well, they've gone to Brazil. There's a backlog of soybean trucks due to harvest delays in Mato Grosso, Brazil's largest producing region. With the harvest highly concentrated this year, we may see more problems like this in the coming weeks because guys can't get to the port. Brazil already has issues with rot, with limitations in terms of just the effectiveness of their logistical system from the crop to the port, which is, again, rail, it's trucking, it's all of these issues combined. And you're seeing there is now more than ever really impacted based on the logistical problems that are going to continue. Now, this is becoming a bigger concern because China needs this food, and they've invested in Brazil to get these soybeans to market, and they're not getting them there in time, and they're risking rot. Now, as we said with over the last few segments, China gained export market share during the pandemic, but that's starting to come down. They're starting to get that whittled away because they're limiting the amount of capacity that they have in order to. They can't supplement. They have to address the fact that they can't keep subsidizing these exports. So that's why market share has already started coming down. They're already getting weighed down in terms of what that market share looks like, which is going to be a problem as they try to address managing GDP growth. Then when we take the recent Lunar New Year, you can see retail sales did well. Excuse me. It was supported based on the amount of people that were local. There was a lot of local growth. There was a lot of local consumption, but there wasn't a lot of travel. So even though retail sales will be better, it's going to be very compartmentalize as to where it was it better, where were there problems, and again, it also limited the amount of diesel and gasoline consumption. But when we look at corn, which is actually higher now, corn trades at a 7-year high or near 7-year high amid robust Chinese demand. China will support and promote innovative research and development and application of genetically modified organisms, GMOs. According to a document from the Minister of Agriculture, in June, the ministry awarded safety certificates to 117 GMOs and related products, allowing their production and application. The party central committee and the state council released the number one document for 2021 because they need to address this issue if they want to make sure that they're safe, promoting rural development and modernizing the agriculture sector, back to the push to rural revitalization. And what is also happening? We have a big problem with the underlying capacity for the yuan internationally because they continued to increase their exposure to the international market. People willingly looked to go buy as much as they could in terms of just capacity, I should say, or bonds, because as they get included in the index, people are forced to, you could be underweighted, but you're forced to own a certain amount of Chinese debt. So when we look at the yuan internationalization, daily yuan trading turnover hits fresh record in offshore centers. But it's the age-old issue of restrictions on the movement of capital across Chinese borders that remains one of the biggest headwinds for the currency faces. China has made a lot of progress on this front, but it's still not quite at the level of free capital flow that you tend to see. Triggers for the reversal include signals on tighter monetary policy from the central bank. Now, this is coming into Shibor. We've seen issues with Shibor. We've seen issues with rates. The People's Bank of China is withdrawing liquidity from the financial system, while local media ran a front-page editorial this week saying China's economic recovery is creating the conditions for the central bank to normalize monetary policy. So we're seeing more growth, we're seeing less growth, more bankruptcies, and there's a bigger concern, and they're trying to take money out of the market and liquidity out of the market as there's continuing stress within the Chinese system. So every time this happens, they say they're going to take liquidity out, and then they panic and then push liquidity back in. So this is going to be one to watch as they look to try to optimize the international markets instead of the internal markets to try to offshore some of this risk. Now, China's banking regulators imposed new restrictions on banks and financial institutions working with online microlenders, including those like Jack Ma, dealing further blows to one of the fastest growing business segments for financial technology behemoths. The new restrictions add to draft rules issued on the booming sector late last year, which heralded the sudden shift, which is why Ant had to pull the IPO. The move upended one of China's biggest business sector's success stories, and then was followed by crackdowns on technology juggernauts across e-commerce. The stock market today, or Wednesday, because you'll see this Thursday, is lower as Beijing tightens regulations on banks that do business with lending platforms. Again, PBOC getting tighter on restrictions. Now, this is all happening as online consumer lending in China has exploded. So they're trying to bring this back under party control. They're trying to bring this back under the PBOC because it's getting away from them. And there's a huge shift to party control, party this, party, the CCP is everything. So let's bring this in-house instead of allowing these entrepreneurs and these large companies to continue to control such an important sector. And this is another issue that the farmers are facing. Farmers' forward sales in Mato Grosso state reached all-time highs. There is now risk that what was sold in Brazil will not make it to market. So again, coming back to the risk in Chinese financing, the risk because China financed a lot of this. So they bought a lot of this. Well, what happens if it goes away? And these are things that we have to consider. Now, soy oil reaches 7-year high as China faces another round of culling of the pig, or I should say, of swine flu. This is increasing the amount of soy oil obviously on top of soybeans. Now, this is the pork, right? The pork roller coaster, as pork prices have weakened a little bit, but now we're going to go higher. A resurgence of swine fever cases in colder northern provinces prompted farmers to slaughter more of their breeding sows before the Lunar New Year. Which other viruses such as foot and mouth disease and porcine epidemic diarrhea have also taken their toll, and outbreaks exacerbated by a harsher than usual winter. The recovery of hog herds in some regions could be delayed, particularly in Shandong and parts of Henan and Hebei. It means that as much as 15% of the national hog herd may have been lost to disease over the winter, and its fully rehabilitation to pre-swine fever levels is more likely to be the second half of 2022. Think about how many problems this is going to create across the full food supply chain. Now that we beat China and all of that to death, let's look at Japan, and we can look at what are some of the benefits where convenience store sales year over year weakened again in January, and we've seen some pretty stable capacity of kind of just going sideways and really no growth as we look at what is happening in one of the largest economies in the world. With Japan being one of them, let's look at with South Korea. So South Korea, their imports, which is a big driver of how strong will exports be, imports are way up for the first half of February, and now that we're also seeing exports do the same. This also speaks to what we're asking South Korea to do, and they're trying to make up as much as they can to drive some of this going forward. Then when we look at South Korea in general, here you can see just what the overall manufacturing, business survey manufacturing, business survey non-manufacturing, everything is looking much better, but we still have a slight increase in COVID cases and just activity in general. So the industrial side is doing well, but the consumer side remains weak, which is okay for us because it just puts more into the export market and helps close some of these gaps. So then when we turn to India, India has a bit more of a bifurcation because the total active cases has actually started to increase or stabilize here, even though new COVID cases are going down. And it's because there's a dynamic of some provinces continue to decline. Some are seeing some restrictions in general. And that is flatlining some of these pull through, which again is even though the lockdown index has gotten better, closer to 65, it's going to remain there as some provinces have kept restrictions in place. Now, this has obviously hurt consumer sentiment as consumer sentiment has gotten worse, and we continue has started in the power demand and some of these other key aspects that we keep talking about on the gasoline side and the diesel side that we covered in the EIA show. And then when we look at the India's projected public debt profile, this becomes a bigger problem when we think about, can they cut diesel prices? Can they cut gasoline prices? And the answer is no, because they're increasing the amount of debt they're putting into the market that they have to cover because the public debt continues to get worse. And it's going to go into fiscal stimulus. So even though it's getting worse, as long as it has something on the other side, it's not a terrible thing because they haven't had the ability to ease or to stimulate as much due to the inflation that they've now started to get under control. But inflation is starting to creep higher, which will pause monetary policy but allow the fiscal stimulus to go through. And this just puts into perspective where that stimulus will go. And when you looked at the based on the revised budgets, capital expenditures, current expenditures, all of these components are going to get a boost, which feeds in well to the U.S. looking to diversify their supply chains and find partners across the region, with India being a key linchpin to all of this. And the budget points to CapEx growth of 26.2% in fiscal 2020 after a projected 30% rise in fiscal 2021. As a proportion of total expenditures, excluding interest and subsidy payments, CapEx is projected to rise to 23.7% in fiscal 2020, up from 20.3% in fiscal 2021 and 18.2% in fiscal 2020. So higher capital spending to support growth. So this gives you an idea of what 2020 fiscal year 2021 and 2022 budgets will look like, and there will be more fiscal push. And this is going to be something that is going to continue through at least the next 24 months, and we should see that. Again, this is also coming to when China is struggling. China and India are big trade partners. They are currently at odds, and India is looking for friends, and right now the friend is in the Southeast Asian regimes, as well as Japan, South Korea, and into the U.S. So we covered a lot. I know that there was a lot in this segment, but I think these are a lot of important aspects as we start to look at this holistically and how Asia is going to matter more and more, especially as we look to what Biden comes up with and what his presidency is going to look like over the next 4 years, especially in the Asian theater. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.